Forex currency trading for beginners. What is Forex trading? Foreign exchange, commonly known as Forex or FX, is the exchange of one currency for another at an agreed exchange price on the over-the-counter market. Forex is the world's most traded market, with compare this to the New York Stock Exchange, which has a daily turnover of around 50 billion US dollars. It is easy to see how the foreign exchange market is the biggest financial market in the world. Unlike most financial markets, the OTC or over-the-counter Forex market has no physical location or central exchange and trades 24 hours a day through global. Hello, welcome to this course, Forex currency trading for beginners. What is Forex trading? Foreign exchange, commonly known as Forex or FX, is the exchange of one currency for another at an agreed exchange price on the over-the-counter market. Forex is the world's most traded market, with an average turnover in excess of 4 trillion US dollars per day. Compare this to the New York Stock Exchange, which has a daily turnover of around 50 billion US dollars. It is easy to see how the foreign exchange market is the biggest financial market in the world. Unlike most financial markets, the OTC or over-the-counter Forex market has no physical location or central exchange and trades 24 hours a day through global network of businesses, banks and individuals. This means that currency prices are constantly fluctuating in value against each other, offering multiple trading opportunities. One of the key elements behind Forex popularity is the fact that the Forex markets are open 24 hours a day from Sunday evening through to Friday night. Trading follows the clock, opening on Monday morning in Wellington, New Zealand, progressing to Asian trade spearheaded out of Tokyo and Singapore before moving to London and closing on Friday evening in New York. This course, you will learn the basics of speculative online Forex trading. You will get familiar with the market terminology. You will understand how practical Forex is to trade, and you will learn how to set up your own demo trading account to practice. I look forward to welcoming you on this course. Enroll today.
About beginner Forex trading. So this presentation is for those people who don't really know all that much about Forex, so they're just starting out, interested to learn more and want to know how to get started. So let's have a look at the first slide. First thing is, don't rush into trading because you do have money at stake. So there's no rush.
This means that currency prices are constantly fluctuating in value against each other, offering multiple trading opportunities. One of the key elements behind Forex popularity is the fact that the Forex markets are open 24 hours a day from Sunday.
Don't put it off for too long because there is a good opportunity there for you to make. That hardly ever happens. Usually they don't just lose what they made, but they lose even more money. Okay?
Trading for beginners, what the brokers don't tell you. So you've seen the adverts on CNBC, the internet, or maybe been to a seminar on how Forex will make you rich overnight. Sorry to tell you, the reality is that 90% of retail FX clients don't make money and most accounts are wiped out in under 6 months. But it's not all doom and gloom. Money can be made from FX, but not by doing what the majority do. Vince Dancioni is a self-made millionaire trader with 26 years experience in trading and investing and gives beginners these tips. Number 1, forget about buying fancy software and don't waste your money on FX robots. It's easy to get blown away with online trading, real-time data, charts, business channels and bells and whistles. The truth is,
hey folks, this is Josh Taylor and I want to welcome you to what is going to be the first of somewhere between 20 and 30 videos that are going to be an entire series called Forex Trading for Beginners. Now, we put together this video for a bunch of our clients that who are kind of new at Forex trading, and we wanted to make sure they have some solid information to build their Forex trading future on. And so these videos, we're going to try to make them short so that you can add a video here and a video there to add a little bit more information and knowledge to your Forex trading arsenal. Okay? Now, if you've never heard of Trade Advisor Pro or you've not worked with us in the past, what I would highly suggest doing is that you sign up for one of our free Forex training webinars. Now, these webinars are going to be a lot more in depth than the videos. The videos are meant to be primer information videos to basically give you some basic guidelines on how the Forex market works. But if you want to see in depth from A to Z how to trade Forex, I'm going to highly suggest that you sign up right now for one of our free Forex webinars. You can actually pause this video and go sign up. I would highly suggest doing that. And you can sign up at tradeadvisorpro.com/Forex. Okay, now I'm going to keep this video on here for a few more seconds, and while you can do that, of course, push the pause button right now. If you're just getting started, I would highly suggest watching the webinar first. But go ahead right now and sign up for the webinar, and I'll give you a few seconds to do that. So the first question is what is Forex? So Forex stands for foreign currency exchange. And the foreign currency exchange market is actually the largest financial market in the world. It is traded at $4 trillion a day. Now, this is anywhere from transactions, whether maybe you are a Japanese company that is looking to buy U.S. parts, or actually that's more likely the other way around, isn't it? Let's say you're a U.S. company and you're buying, like you're Ford, and you're going to be buying, $50 billion worth of parts from a company in Japan. Well, for you to buy those parts from Japan, they're not going to take U.S. dollars, right? They're going to take Japanese yen, and so there has to be an exchange of those U.S. dollars into the foreign instrument, which is in this case the Japanese yen. So you would exchange those U.S. dollars, usually at the banks, into Japanese yen and make your payment on that. So that is one piece of the Forex market. But what we're going to talk about in the Forex market is the spot Forex market. Now, the spot Forex market is basically what everybody's talking about. When you hear people talking about Forex trading, they're talking about the spot Forex market. So in the previous example we talked about that we're taking US dollars and exchanging them in for yen, you actually, the company would actually own US dollars in their hands or in the bank, and they're exchanging them in for Japanese yen in their bank. Okay, they're what you call taking possession of those funds. The spot Forex market, you don't actually take possession of those currency instruments. You're not actually buying or selling an exchange in your hand. It is all done electronically, so it's called the spot Forex market. You're basically holding electronic positions in these currency pairs. And when we take these positions, we're always trading these Forex currency pairs in pairs. Okay, so in our example we talked about before, exchanging the US dollar for yen. Now here's two different currency pairs: the euro yen and the euro US dollar. Okay, what this means is if we're buying the euro, if we're buying the euro yen, what that means is we're buying euros and selling yen. Okay, now if we were selling the euro yen pair, then we were actually selling euros and buying yen. Okay, so what we do is our goal as Forex traders is to take positions. It doesn't matter. Like in stocks, there are more advanced techniques when you're trading stocks, but most people out there use the buy and hold method. Buy a stock, it goes up, you sell it, and you make a profit. Now you can short a stock. There's a lot of speculated risk when you're shorting stocks, but in the foreign currency exchange trading using the foreign currency spot market, it doesn't matter if the price is going up or it's going down, as long as you are betting in the right position, in the right direction, you're a winner. So in other words, if you put an order in to sell the euro US dollar, and you put your order in and the US dollar drops, does that make sense? So if our goal was to sell the euro US dollar and we sold it and it dropped, then we are in profit. And when we close out that trade, we make a profit. And likewise, if we buy the euro US dollar, which means we're buying euros and selling US dollars at the same time, and the pair goes up, then we make a profit. Okay, so our goal isn't as much as we got to wait for an opportunity to buy, but what direction do we feel based on past performance and current economic factors that are going on in the market right now that will cause what direction do we feel that currency pair is going to go? And once we understand that, then we have to choose the proper entry point and exit point. Where we're going to get in, what's the most highly favored opportunity to get into the trade, and where do we exit out of the trade in order to make a profit. And of course, you want to make sure you use what's called a stop loss, which means if the trade goes against you, which sometimes they do, then you need to make sure you pull out of the trade without putting all of your capital in your Forex trading account at risk. Does that make sense? So here's an example of a chart on the USD yen. We talked about the example earlier of buying your exchanging US dollars for yen. Now this is the dollar yen currency pair, and what we can see here is that since around this time right here, the value of the dollar has strengthened against the yen. Okay, so in this opportunity, when you see the currency pair going up, and let's say if we expect the currency pair to go up, then what we want to do is wait for a pullback on this currency pair to get for an entry point. And likewise, when this currency pair dropped, if we would have saw any indicator of this thing dropping, we would have waited for price to go up to a point for an entry, for this price to drop. Now here's the thing I want to share with you, because there's so many different theories, and there's a million and one ways to trade Forex supposedly out there, and there are so many factors that are actually causing more confusion than not. So I want to explain one simple concept here, and this is the concept of simple support and resistance. Okay, now here's what I want to show you. This is what your charts should look like. Okay, it's clean. Look at this chart. This is clean. It's easy to read. It's understandable. It's very easy for me to choose good potential trading opportunities using this chart. Now here's what the chart looks like for a lot of Forex traders out there. Now tell me if you can read what this chart is, or if you think you can pick out good potential trade opportunities. So I'm going to make this easy for you. Bad chart, good chart. Does that make sense? Now, one thing that our company does at Trade Advisor Pro is we actually go through about 13 to 14 currency pairs on a daily basis, and usually twice a day we send out a trade market update, and we show the best opportunities where to buy and sell these pairs, and where to close out for profit, where to put a stop loss, so that we can take a lot of the guesswork out for you. Okay, our award-winning trade signals are top rated amongst all the other trade signals companies out there. We average over 1,000 pips a month, and our win-loss ratio is unbelievable. So again, if you have not signed up for a free webinar, I would highly suggest doing that, because we explain a lot more in depth on that webinar how our service works. All right. So now I want to move on to some live charts, and we're talking about show you some live trading. And I want you to think about foreign currency trading. When we talked about, we just showed you two pictures of charts, right? One was a complete mess. All these crazy indicators are supposedly going to show you where to be entering or exiting trades. And then there is a simple system that I use, which is nothing but support and resistance. Okay, so let's talk about this. Let's look at a pair here. In fact, I had a pair I want to bring up. All right, This is a picture of the chart we just had up here a little bit ago. This is a live trading chart. In fact, so while we're talking, you may see this price go up and down a few pips here. Every one of these points is called a pip, a price index point. When they're yen pairs, any currency pair trading against a yen is only going to be 2 decimal points past, and other currency pairs are most of the time 4 decimal points, right? So every one of these, like you see, this is the euro US dollar, which is at 32.62, which means it takes 1.3262 US dollars to buy 1 euro. Okay, and so as the value of the actually, as economic factors happen in each country, in this case the euro against the US dollar, as any economic factors to come out, whether it's news releases on where the current economic conditions are in the US or current economic conditions in the euro, that would cause the value of one of our currency pairs to strengthen against the other, these currency pairs move up and down. And in fact, it looks difficult, but it's actually very predictable. In fact, I want to go to a currency pair that we've been trading a lot for the last couple of weeks. We've had I don't know how many, 7, 8 profitable trades of this pair. And you can see this is the euro yen, and this is the euro against the yen. So here's a concept you need to write down. Okay, and this is non-scripted, guys. I'm just sitting here blabbing on a video to explain to you guys how this works. And this is something that's very, very important. So I'm going to say this slowly. I'm going to repeat it, and I want you to understand this. Currency pairs trade within a range 80% of the time. Now here's what this means. On this current chart, you can see that there's times where price spikes up, spikes down, spikes up, down, up real quick, but most of the time you can see that this currency pair has been trading in what we call ranges. Let me squeeze this in a little bit more. This is a range. See this? Boom, 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 boom. 80% of the time. Eventually this is going to break out. In fact, we're getting really close because price is squeezing in what we call a pennant pattern, where this resistance point is held firm and this trend line is held firm. It's moving up, 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 and we're going to see this thing break out. So it will break out, but eventually it'll go back into another range. Here's a range here. See, in this area. I'm going to move this down. And not all the ranges are going to be perfect, but you can see that for the most part, price is boom, 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 boom. Now, then it broke out down into another range, and it got into another range. 80% of the time, a currency pair will trade within a range. So our goal is to trade these ranges. And for instance, on this euro pound trade, a currency pair, we've actually been trading this thing for the last couple of weeks very, very successfully. We continually bought here, sold here, bought here, sold, bought, sold, bought, and currently, as of this morning, we actually sold this pair. We're already up a small amount, 5%, 5 pips in profit, but we're expecting this pair to come back down, at least down to this trend line. We're going to close out at a profit, and which we will buy again. So, I want you to think about currency pairs and these price levels, which we call ranges, okay, as an apartment building. Now, if you let's say this is a 10-story apartment building, okay, and we're going to put a line here, okay, and I'm going to color this so you can see it. We're going to call this we're just going to say this is a floor. Okay, this is the ground floor. Okay, now you can see that this currency pair seems to have a ceiling. There's certain spots where the price, like here, for days, it tried to break through this and it could not break through, could not properly break through. And same with here, this 8,400 mark. As you can see, price all the way back from mid of December, I think it's December 14th. That this price has been trying to break through the ceiling. Okay, remember, floor, ceiling. Now, so here we were. Here's a floor, here's a floor. Okay, now, and here's a floor. So we got 3 floors. 1, 2, 3. Now, you can see here that price has been stuck on the ceiling. Imagine like you're jumping up and down on a trampoline in your apartment. You can't break through your ceiling. Every time you jump up, your hands hit the ceiling, you jump back down. And you have the floor holding you. This is called a support. Okay? So you can see that this currency pair is going up. It would not break through the ceiling. Small breaks, it's not the big deal. This is a breakthrough, okay? This is price trying to break through and trying to test this resistance level. Came all the way down to the ceiling, floor, back to the ceiling, floor. It fought. Eventually it broke through the floor and it walked itself down to the basement, right? Stayed here for a little bit, broke back up into the floor. And so think about this. Eventually this price is going to break up, either down or up, and it's going to go into a new floor in a new range, either down, back up, it'll either go up, or it's going to break down to a new range, or it's going to break down into our lower range. So our goal here is, when we're trading these currency pairs, is to find the range, sell at the ceiling, and buy in the basement. Or like we've been right in this range. We didn't buy here. We bought in here. You can see these two green lines. The reason I drew these green lines, this has been a strong range that we're in. We've been buying and selling like crazy. You buy at the bottom, we're selling at the top. When we sell at the top, price drops down. We close our profit up in this range. When we buy, we're closing our profit up in this range. And we've been taking these trades almost daily at this point for the last 2 weeks. Okay, does that make sense? So think about it. Same here. Back in November of 2011, all the way through to mid-December, this thing rode in a range between this 86 something mark and 8,500. It just kept every day rotating through. In fact, you probably bring this up here, is actually tighter into the range, more trading opportunities. Okay. And what we simply do, one of the things we do is we want to make sure we put a stop loss in these trades. So because we don't hold a crystal ball, we cannot predict the direction to the 100% guarantee mark. Okay, there's no guarantee. These are the best potential opportunities that if price drives up to here, this is a good place to sell, which is where we're at now. Okay, and based on past data, that's where it's at. Eventually, we will break out of that range. But so what we do is we put what's called a stop loss, and that is if this price moves up to a certain point, then it is obviously gone way beyond a range. It's broken out of the range, and we want to make sure we close at a certain point to minimize our risk. Okay, and we talk about in one of our videos on risk management that I don't like to risk more than 2% of my account balance on one given trade. So if I've got $100,000 in my trading account, I do not want to risk more than 2%. So that trade goes against me and I get stopped out. It forces it to close because price drove up the wrong direction. I do not want to risk more than 2% or $2,000. Why? Because when I wake up in the morning, if I have $100,000 in my account and I lost $2,000, it's not going to freak me out, right? But if you're leveraging 20% of your account, and you woke up and you lost $20,000, you're going to freak out. And what happens at that point is many people do what's called revenge trading. They start fighting to get their $20,000 back, and in doing so, instead of waiting the market out and being patient, they are clicking buttons because they want to get in a trade and try to gamble. At that point, the gambling bug takes over, and all reason goes out the window, and they start losing money. So the goal is, if you don't over leverage your account and you're patient, you can trade these swings. This is what we call swing trading. In these ranges, put a proper stop loss. Okay, and we'll talk about how to look at proper entry points and exit points and stop losses in another training video. And be very successful as a trader. Now, again, if you've not signed up for our webinar, I highly suggest doing that because we talk about how to do this in depth. But we also talk about our unbelievable trade service, which we talked about earlier, where we are actually sending out 12 to 15 trades a week that we say here's a good entry point. We want to put a stop loss down here, and we're going to close out at profit here. And we show you exactly where to do it. We have video market update videos that show you why we took certain trades, so you can get more educated on your own, so you can start looking at charts and making some of your own decisions. But our trades alone, I mean, here we are 21 days into the month. We've had 16 profitable trades. Only 2 losses for the entire month, which is unreal, unheard of, because of the way we trade compared to most of the other services out there is a completely different setup. So way simpler, and it works. A lot of these companies are using too many indicators that do not work. Okay, support and resistance, people. Keep it simple. So anyway, if you've not signed up for the webinar, sign up below, and you definitely want to give us a test, a trial run on the Signal service, where we send you these trades every day, and you can actually try it for $1. When you get on the webinar, we actually give you a chance to try it for $1 for 1 week. It doesn't cost you anything. You don't like the service, you can we'll send you your $1 back. It's not a big deal. But anyway, enough of the shameless promotion there. But here, that's it in a nutshell for today's training video. Watch this video a few times, and we're going to get deeper into proper exit points, equity management, and more details of how the Forex market works in future training videos. Now folks, if you've not already signed up for one of our free Forex webinar trainings, I highly suggest that you do that now. A lot of the information that you're finding in our videos is covered in much greater detail in our webinars. It doesn't matter where you're at as a trader, whether you're a professional trader who's been trading for 20 or 30 years, or if you're brand new, you've never heard of Forex. The information in our webinars is going to help steer you in the right direction and show you how to be profitable as a trader, how to protect yourself from loss, and how to make Forex trading fun and profitable for you. So here's where you want to go. You want to go to tradeadvisorpro.com/Forex, okay? So register now and sign up for our free Forex webinar at tradeadvisorpro.com/Forex.